Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, what a somber start to October, given the fact that we have seen a triple-digit cut come in on the Nifty. In fact, it has shut shop below that 19,550 mark. But at one point we had broken below that 19,500 mark. We've managed to defend that for now. But historically, of course, October is known to be a weakish month. Hopefully, we would hope that we manage to break that jinx and perhaps look at making a fresh dash at 20,000 or thereabouts. So some technical analysts believe that if we maintain 19,600, 700, we could perhaps look at once again reclaiming that important level. But when it comes to today's action, mid and small caps held out very firmly. 4 to 5/10% gains coming in on the mid cap and small cap indices. Autos and FMCG, these were the top sectoral culprits, so to say. These were the top sectoral losers today. But PSU banks are then 2.5% gains coming in on that index. Quite surprising, because in the mid afternoon around, I saw somewhere around 1% or thereabouts kind of gains on the Nifty PSU bank index. It has only accelerated, and we've seen 2.5% kind of gains coming in there. If you look at the individual movers on the Nifty, you had Bajaj Twins. You had L&T, Titan, SBI, the biggie from the PSU banking pack, Adani Post. These are some of the gainers. On the losing end, ONGC, of course, because of the windfall tax hike, that stock was one of the top losers. Eicher Motors, Hindalco, Maruti, Dr. Reddy's among the other losers. But Yatin, when it comes to the mid caps, quite a few stocks are flying high today.
Absolutely, and Nandita, as you were mentioning, I think the PSU banking space was one clear winner in trade. Despite the market conditions, PSU index, bank index itself is at a multi-year high. Now, if you look at the mid cap end of the market, the mid cap index gained almost 0.2%. Small cap index up more than 0.5%. New IPO listing JSW Infra, that did really well, logged in upper circuit and ended the day with 33% gains versus the IPO price. Now, if you look at the mid cap gainers, Metro Brands, that stock was up 12%, Ujjivan Small Finance Bank, MGL, and we'll talk about it later, Network 18, PNB Housing, all of these stocks are doing quite well in trade. However, laggards like MCX, Delta Corp, ONGC continue to drag the markets. In fact, Delta Corp and MCX, these are the two stocks which have been going down on huge volumes, mind you, on the news flow that has come in. Delta Corp, obviously, ever since the GST notice has come in, that stock has been witnessing continuous pressure, and so is MCX after the regulator stopped the implementation of the new platform with TCS.
Right, those were some of the mid and small cap, gainers and losers in trade. But let's take a look at the top stocks that are on our radar this afternoon. Starting with Vedanta, of course, the stock did gain somewhere around 4% or thereabouts today. The company will, of course, be demerging its businesses into 6 independent firms. Of course, after a decade where we saw a lot of mergers happen and consolidation of business happen, we have seen life come a full circle when it comes to the Vedanta group. They will be demerging its business into 6 independent units, Vedanta Limited, then they'll be carving out aluminium, oil and gas, power, base metals, ferrous and ferrous and other metals as well. So Vedanta Limited will remain the holding company. In fact, it will the semiconductor business will be housed under that. It will also hold that 65% stake in Hindustan Zinc under Vedanta Limited, and every Vedanta Limited shareholder will get 1 share of the other 5 entities for every 1 share held in Vedanta. So that's the whole crux of how the conglomerate will look like post demerger. But if you look at what the brokerages have done, most of them have retained their sell rating, but CLSA has gone ahead and double upgraded the counter to outperform, citing attractive valuations. Of course, share prices have corrected quite a bit over the last 3 months. I think the stock has shed somewhere around 20% or thereabouts. But CLSA also believes that this move to demerge companies will help in unlocking value, as investors can directly invest in the pure plays now, in the different businesses, and they can choose which business to invest in. But the real concern, of course, is the debt overhang of the promoter group company. The thing is that there are a couple of repayments due in 2024, but in an exclusive chat with CNBC TV 18, Anil Agarwal has said that they are prepared to repay that debt, and they are okay to refinance as well as prepared to repay that debt. And Rakesh Arora, I had a chat with him in the morning. He was of the view that Vedanta promoters can handle the 2024 payable, but it's the 2025 2025 payments that will come under pressure, the funding gap there, how they plan to bridge that is something that the street will be watching out for, and that is something that will decide the long term trajectory of the stock. But Anil Agarwal has also said that when it comes to the iron ore and steel business, they are looking to sell that business and reduce debt by somewhere around March 2024. So that is something that will decide the future action. For now, I think investors are happy that they are getting value unlocking happening at the current juncture, because different businesses are getting demerged and they can in fact select which business to now invest in. So let's see how things pan out from here for Vedanta, of course, but today the stock was up 4%.
Absolutely, and debt is one major problem which the group faces. Probably some resolution there would surely help, but till that time brokerages are really cautious on the stock, especially I was reading one of the Kotak Securities report in which they said that the parent is in a debt trap and probably coming out would be difficult. Probably strategic stake sale in few of these businesses should help. Nevertheless, Vedanta closed almost near at the day's high, 4% higher. Last week also gained smartly, but what was also gaining in trade today were the gas stocks, especially Mahanagar Gas, MGL. Now Jefferies has today upgraded the stock to a buy. Target price has been increased from 1100 to 1320. So almost a 20% kind of a target hike is what we saw in the share price of MCX by Jefferies. Now Jefferies believes that the stock is trading at a very attractive 4% kind of a dividend yield. More importantly, the OEM partnership should help the volume growth which the company was lagging. Also, they have increased the earnings estimate for the coming financial years by a whopping 6% for FY24 and 27% for FY25 on higher volumes as well as better margins. Now, if you look at the stock, the risk reward is quite favorable according to Jefferies, since the stock is available only at a P multiple of 10 times. So from here, for the stock to move, as well as for investors to make money, there is a lot of headroom, and hence this upgrade coming in. And post upgrade, the stock of MGL gained as much as 7% intraday, closing almost at the day's high. So good price and volume action on this stock.
Right, and despite the fact that the stock has run up 30% on a YTD basis, as you mentioned, the valuations still look attractive. Perhaps, that's something that, will trigger a lot of buying in the stock going forward. But with that, let's take a look at the second stock on my list today, Marico. Now, this stock closed, I think, off day's highs, even though it did manage to gain somewhere around 2% or thereabouts, given the fact that ICICI Securities has upgraded the stock to buy. The stock, in fact, hit a fresh 52-week high earlier in the session, and ICICI Securities expects the counter to hit 670 rupees per share, which is a 19% upside from current levels. In fact, it had a meeting with the management, and wherein they had highlighted that the company is aiming for 8% volume growth over the medium term. Remember, in the first quarter, the volume growth wasn't as good as the company was expecting, which is why it was a kind of a dampener for the company. But given the fact that monsoons have picked up pace in September and made up for the deficit that we saw in August, rural recovery is expected to pick up from here, and the revival in rural consumption is likely to aid volume growth for the company going forward. In fact, volume growth in the parachute coconut oil is also expected to improve, and the food segment revenue is expected to overtake the edible oil business revenue. So that also bodes well for the company. If you look at the stock, it is up 20% in the last 6 months. Return ratio in excess of 30% has been pretty healthy, and FMCG stocks usually command a higher valuations, PE multiples, but if you compare to the sector, I think Marico is a little cheaper compared to its peers in the sector. So looks like things are looking up for the likes of Marico, Yatin.
Absolutely, and today I was also searching for news why the stock was higher, but no particular news bit as far as the stock is concerned, but clearly one of those stocks wherein for the last 1 or 2 quarters we have seen some changes in the product mix, some better volume growth. The street is always concerned about volume growth in FMCG companies, which the company was failing to deliver for quite some time. But probably for the last 1 or 2 quarters, the results have been much better than the street expectations, and we hope that volume growth trajectory and margin improvement trajectory continues for the company. I think these are the 3 stocks which were there on the focus list. Let's hope that the market really holds this 19,500 mark on the Nifty Yeah, because there's a psychological mark and a technical level.
Yeah.
A lot of investors are watching out for. Today we probably defended that 19,500 mark. Let's see, given the global cues and sell off in the base metals, gold, silver, whether or not there are more legs to this rally.
Let's see, because the oil factor is comforting for us.
Yeah.
And FIIs, of course, have turned massive sellers in the month of September. Hopefully, that will turn around, as we progress this month. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below. And of course, come back and join us at 8:30 a.m. tomorrow morning when I bring to you Morning Trade, where we'll be taking up all your stock-related queries with our technical expert as well. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.